So you've got $10,000 to renovate your home and you're trying to figure out what you should buy to maximize your property value, then you need to watch this. Hi everyone, Tuan Duong, founder of Juratax, here for another video designed to help you become a better property investor. Whether you're preparing to sell your property at maximum value or looking to update your home, renovating can be tough because of how many choices you have. Knowing what renovation purchases to make to yield the highest return for money is key. So, to keep things fun and informative, we were asked that if we had $10,000 to do a renovation, what would we do to maximize your property value? Before we get started on the renovations list, we want to be clear that this video is for informational purposes only. In no way should you interpret this as financial advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. One of the simplest home upgrades that provide added value to your home is lighting. So the first thing we will do with $10,000 is update the light fixtures. You'll be amazed by how well placed pools of warm light can make your home inviting and user-friendly. If you're holding on to the property and not selling, new downlights also depreciate very quickly and can potentially lower electricity bills. According to the ATO, the effective life of downlights is 5 years, so they will depreciate at a rate of 40% of its current cost using the diminishing value method. So if we paid $2,800 to install new lighting fixtures, we'd save $1,120 from our depreciation claim in the first year. The next item we would install are blinds. It's possible to create a whole new look without renovating. Small but modern updates such as installing blinds is a simple, cost-effective way to elevate the room's appearance and give the house a more modern appeal. Blinds are also good for depreciation because they only have an effective life of 10 years. So if we spent $1,600 on the new blinds, we could claim $320 in depreciation in the first year. After downlights and blinds, we have $5,600 left to complete the renovations. Updating or replacing the kitchen is one of the top renovations to increase value, but with a smaller budget like we have, it's not necessarily possible to redo the entire kitchen. So, the next best option is to upgrade some of the appliances. The kitchen is the hub of the home, so functionality is top priority. So, we would suggest replacing the oven, cooktop, and range hood. In most cases, you can buy all three as a set, so it'll set you back around $2,200. The great thing about updating your kitchen appliances is that even though you bought them as a set, they're depreciated individually. If they are under $1,000, they will still yield good depreciation in the first few years, since the values would be allocated to the low value pool. The low value pool rules allow you to depreciate the value of your assets at an accelerated rate. So you can potentially depreciate the bulk of your assets value within 3 to 4 years instead of the ATO's prescribed effective life. So in the first year of installing the new kitchen appliance, you can depreciate $412.50 based on a cost of $2,200. Okay. After installing the new kitchen appliances, we have $3,400 left to complete the renovations. There are two things we suggest doing: vinyl flooring or a repaint. Paint is quite a powerful renovation tool because you can instantly modernize and refresh a tired property with a coat of paint in a temporary color scheme. It's also one of the easiest and most cost-effective ways to refresh your home's look while boosting value. But if you're looking to increase the value of your property and save some dollars on depreciation, paint is not necessarily the best option. This is because it'll form part of your capital works deductions, which can be claimed at a rate of 2.5% for a maximum of 40 years. So it's definitely not going to give you a high tax break anytime soon. On the other hand, vinyl flooring will depreciate at a much faster rate over a shorter period of time. It's also the most inexpensive of the flooring options with a wide range of contemporary designs. You could go for a marble mosaic tile or even stained and distressed reclaimed wood. Vinyl is a great way to upgrade your space and boost its value with a smaller renovation budget. If we spent the last $3,400 on vinyl flooring, it would depreciate over an effective life of 10 years. So you could make $680 of instant savings just for claiming depreciation in the first year alone. So There you have it. The 4 things we would spend $10,000 on during renovations for maximum property value. All of the items boost your property value, are relatively simple to complete, and they'll boost your depreciation savings. If we add up the depreciation from the 4 items, lighting, blinds, kitchen appliances, and vinyl flooring, you could save a total of $2,532.50. So not only are you boosting your property's values, you're boosting your savings too. It's a win-win. To claim these deductions, you'll need to get your hands on a depreciation schedule. A depreciation schedule is one of the most beneficial tools for property investors to maximize their tax returns. So, we hope this helped guide you through your next property renovation. The smallest changes can make the biggest differences and bring about great tax savings. If you have any questions about depreciation and property renovations, please drop them in the comments section below. Otherwise, make sure to give us a thumbs up and subscribe for more property investment tips. I'm Tuan Duong from Duo Tax. I'll see you guys next time.